What is going on, everyone, and welcome back to Bitcoin Bulletin, the only place on YouTube where we break down the biggest stories hitting the crypto world and deliver them straight to you, faster than a lightning node. The pace of change in this space is absolutely insane, and if you're not plugged in, you're going to miss out. Today, we've got a batch of updates that are going to make your head spin, from how major institutions are getting their crypto fix to surprising shifts in the market and essential knowledge drops that everyone needs to hear. Get ready, because this is the Bitcoin Bulletin, and we've got your back with the unmissable news you need to know right now. First up, we're diving deep into how state investment boards are getting involved with Bitcoin, and you might be surprised by their strategy. Forget the direct approach. They're finding a clever, indirect way, and that's making waves across the financial world. We'll unpack the details of this innovative method and what it means for the broader market. Stick around, you don't want to miss this. Then, we're tracking a significant strategic shift happening right under our noses. Whales are making moves, and it looks like some of the big players might be reallocating their assets, with a surprising destination in mind. What does this mean for the market leaders, and where is all that capital flowing? We've got the scoop. Next, we're talking about network dominance and long-term value. How is Bitcoin continuing to pull in the gravitational force of the entire altcoin market, and what does this mean for its enduring appeal? We'll break down the dynamics that keep Bitcoin at the top, even as other assets try to compete. And finally, we've got a must-have guide for anyone looking to level up their knowledge. One of the sharpest minds in the space is sharing their top resources for understanding Bitcoin, and trust us, these are the essentials you've been searching for. Get ready to learn from the best. Don't go anywhere, hit that subscribe button, ring the notification bell, and let's get into it. State funds embrace Bitcoin via MicroStrategy. Governments are quietly entering the Bitcoin arena. State investment boards and pension funds are increasingly turning to MicroStrategy as a pathway to gain exposure to Bitcoin, signaling a significant shift in how traditional finance is engaging with digital assets. This trend highlights a growing acceptance of Bitcoin as a legitimate investment vehicle, though it also raises critical questions about the risks and rewards inherent in indirect investment strategies. The momentum behind institutional investment in Bitcoin is undeniable, with state-level entities now actively exploring its potential. A prime example is the Wisconsin Investment Board, SWIB, which recently boosted its Bitcoin exposure to $45.4 million by acquiring shares in MicroStrategy, a company renowned for its substantial Bitcoin holdings. This move by SWIB is emblematic of a broader movement where U.S. states are strategically positioning themselves within the digital asset landscape, viewing Bitcoin as a potential hedge against inflation and a valuable tool for portfolio diversification. MicroStrategy has emerged as a favored avenue for institutions seeking Bitcoin exposure without the complexities of direct ownership. By investing in MicroStrategy stock, these entities effectively gain indirect access to the company's vast Bitcoin reserves, which currently exceed 200,000 BTC. This indirect approach offers state funds a more regulated and familiar entry point into the cryptocurrency market, mitigating some of the operational hurdles and regulatory uncertainties associated with holding Bitcoin directly. It allows them to participate in the potential upside of Bitcoin while navigating the existing financial frameworks. For companies and entities looking to integrate Bitcoin into their treasury management, adhering to best practices is paramount. This includes employing non-dilutive financing strategies, implementing dynamic hedging techniques to manage price volatility, and partnering with regulated custodians to ensure compliance and security. Such measures are crucial for bolstering financial stability and managing the inherent risks associated with cryptocurrency investments, ensuring a robust and responsible approach. While investing indirectly through MicroStrategy provides a more regulated gateway, it is not without its own set of challenges. The value of MicroStrategy stock can be influenced by a variety of factors unrelated to Bitcoin's price, introducing a layer of company-specific risk. Furthermore, relying on a single corporation's performance rather than the underlying asset's fundamentals means concentrating risk. Public pension funds, typically characterized by their risk-averse nature, must carefully weigh these indirect investment risks against the potential benefits of Bitcoin exposure. As more state-backed funds venture into the cryptocurrency space, the regulatory environment is adapting. States are actively developing frameworks to facilitate responsible digital asset investments, reflecting a significant evolution in public perception and institutional acceptance. The Wisconsin Investment Board's proactive stance may well serve as a catalyst for other state funds, further legitimizing Bitcoin as a viable long-term investment. This increasing institutional adoption, particularly through entities like MicroStrategy, signifies a pivotal moment for state funds engaging with digital assets. The allure of potential rewards is balanced by the considerable risks of indirect investment. As regulatory landscapes continue to mature, state investment boards must navigate these complexities with diligence to capitalize on cryptocurrency opportunities while upholding their fiduciary duties. The path forward for state investments in Bitcoin appears promising, provided careful planning and risk management are prioritized in this dynamic market. But what happens when the big players start shifting their focus? We're about to explore a surprising strategic pivot that's shaking up the market. Whale activity sparks strategic shift, Bitcoin to Ethereum. The cryptocurrency market is abuzz with speculation as significant whale activity suggests a potential strategic shift, with large holders potentially reallocating assets from Bitcoin to Ethereum. This movement, driven by evolving market dynamics and perceived opportunities, could signal a notable change in investor sentiment and asset allocation strategies among major players. This potential reallocation from Bitcoin to Ethereum is occurring amidst a period of heightened volatility and shifting narratives within the crypto space. While Bitcoin remains the dominant cryptocurrency by market capitalization, Ethereum's ongoing development, particularly with its transition to proof-of-stake and the continued growth of its ecosystem, has made it an increasingly attractive prospect for large-scale investors. Whales, entities holding substantial amounts of cryptocurrency, often act as early indicators of market trends due to their significant capital deployment. Their movements can influence market sentiment and price action, making any major shift in their holdings a closely watched event. The specific drivers behind this alleged shift are multifaceted. Some analysts point to Ethereum's utility beyond a simple store of value, citing its role as the foundational layer for decentralized finance, DeFi, non-fungible tokens, NFTs, and a myriad of other blockchain applications. As the Ethereum network matures and its scalability solutions progress, its potential for real-world adoption and application grows, making it a compelling investment for those seeking more than just digital gold. Conversely, Bitcoin, while celebrated for its scarcity and network security, is often viewed primarily as a digital store of value, a narrative that may resonate less with investors looking for active utility and growth potential in burgeoning digital economies. Furthermore, market conditions play a crucial role. Periods of Bitcoin consolidation or sideways movement can prompt whales to seek higher returns or different risk-reward profiles elsewhere. Ethereum, with its active development roadmap and the anticipation surrounding future upgrades, offers a narrative of continuous innovation and potential price appreciation that can be highly attractive. The recent performance metrics and the ongoing technological advancements within the Ethereum ecosystem are likely contributing factors to this potential investor migration. However, such a significant shift is not without its own set of implications and risks. A sustained outflow of capital from Bitcoin by whales could create downward pressure on its price, while a corresponding inflow into Ethereum could boost its market position and value. This dynamic could lead to increased volatility in both major cryptocurrencies as the market digests these strategic realignments. It also raises questions about the long-term dominance of Bitcoin as the primary digital asset and the potential for Ethereum to capture a larger share of institutional interest and market capitalization. Community and expert reactions to this potential trend are varied. Some view it as a healthy diversification of capital within the crypto ecosystem, promoting growth across different digital assets. Others express concern particularly for Bitcoin maximalists who see any move away from Bitcoin as a deviation from its core principles. Analysts are closely monitoring on-chain data and whale wallet movements to confirm the extent and conviction of this strategic shift, recognizing that such large-scale capital flows can be harbingers of significant market trend changes. But as capital flows potentially shift, what's keeping Bitcoin firmly anchored? We're diving into the network's enduring dominance and how it continues to pull the entire altcoin market into its orbit. Bitcoin's network dominance, the gravitational pull on altcoins. Bitcoin continues to exert a powerful gravitational pull on the broader cryptocurrency market, maintaining its network dominance and demonstrating a remarkable capacity for long-term value capture. This enduring strength, rooted in its foundational status and pioneering role, significantly influences the performance and perception of numerous altcoins, creating a unique dynamic within the digital asset ecosystem. The concept of Bitcoin's network dominance refers to its substantial share of the total cryptocurrency market capitalization. Despite the proliferation of thousands of altcoins, Bitcoin consistently holds the largest portion of the market's value. This dominance is not merely a statistical anomaly. It reflects Bitcoin's pioneering status as the first decentralized cryptocurrency, its robust security through the proof-of-work consensus mechanism, and its widespread recognition as a digital store of value, often referred to as digital gold. This established reputation and market leadership create a foundational stability that influences investor confidence across the entire crypto landscape. Bitcoin's long-term value capture is intrinsically linked to its network effects and its role as the primary on-ramp for new capital entering the cryptocurrency market. When new investors are introduced to crypto, Bitcoin is often their first point of contact and primary investment. This continuous influx of capital, coupled with Bitcoin's fixed supply, contributes to its sustained value appreciation over the long term. Furthermore, Bitcoin's network is the most battle-tested and secure, having operated without significant failure for over a decade. This proven resilience builds trust and encourages its adoption as a reliable asset, even amidst the rapid innovation seen in other digital currencies. The gravitational pull Bitcoin exerts on altcoins can be understood through several mechanisms. Firstly, capital often flows into Bitcoin first, and then, as investors seek higher potential returns or diversification, capital is deployed into altcoins. This means that Bitcoin's price movements can often lead or correlate with the movements of many altcoins. When Bitcoin experiences significant price surges, it often creates a positive sentiment that spills over into the altcoin market, leading to rallies across various digital assets. Conversely, periods of Bitcoin decline or stagnation can dampen enthusiasm and lead to sell-offs in the altcoin space. Secondly, the technological and infrastructural developments surrounding Bitcoin, such as the Lightning Network, enhance its utility and scalability, further solidifying its position. These advancements make Bitcoin more practical for everyday transactions and a more robust store of value, reinforcing its primary use cases. As Bitcoin evolves, it sets a benchmark for what is possible in the digital asset space, influencing the development trajectories and perceived value of competing cryptocurrencies. Moreover, regulatory clarity and institutional adoption tend to focus initially on Bitcoin due to its established track record and market dominance. As major financial institutions and governments consider digital assets, Bitcoin is often the primary asset they engage with. This institutional validation further enhances Bitcoin's perceived legitimacy and attractiveness, indirectly benefiting the entire crypto market by increasing its overall credibility. Community and expert opinions generally support the idea of Bitcoin's enduring dominance. Many analysts believe that while altcoins offer innovation and specialized use cases, Bitcoin's role as the foundational store of value and the primary gateway to the crypto economy will ensure its continued leadership. The network's security, decentralization, and historical performance are seen as key pillars supporting its long-term value proposition. The success of altcoins is often viewed as dependent, to some extent, on the health and growth of the Bitcoin network, highlighting a symbiotic, albeit hierarchical, relationship. But staying ahead in this fast-paced world means continuous learning. Up next, we've got essential resources from a crypto expert to boost your Bitcoin knowledge. Fitz shares essential Bitcoin learning resources. In the rapidly evolving world of digital assets, staying informed and knowledgeable is paramount. Fitz, a recognized voice in the cryptocurrency community, has shared a curated list of essential resources for anyone looking to deepen their understanding of Bitcoin. This guidance is particularly valuable for newcomers and seasoned enthusiasts alike, offering pathways to reliable information and educational content. Fitz's recommendations aim to demystify Bitcoin and its underlying technology, providing a solid foundation for navigating the complexities of the market. The selection of resources is designed to cover various aspects of Bitcoin, from its fundamental principles and economic implications to its technological advancements and investment strategies. By highlighting these key resources, Fitz is empowering the community with the tools needed to make informed decisions and engage more effectively with the Bitcoin ecosystem. The curated list likely includes a mix of foundational texts, reputable online platforms, insightful analytical tools, and perhaps even influential podcasts or video channels. For instance, classic white papers and academic studies on cryptography and monetary policy might be recommended for a deep dive into Bitcoin's theoretical underpinnings. Online educational platforms known for their clear explanations of blockchain technology and cryptocurrency mechanics would also be crucial. Fitz might emphasize resources that break down complex topics like mining, transaction validation, and the Bitcoin halving cycles in an accessible manner. Furthermore, staying updated on market trends, regulatory developments, and technological upgrades requires access to timely and accurate news sources and analysis. Fitz's recommendations could include established financial news outlets that cover crypto, specialized blockchain analytics firms, or prominent community forums where discussions on Bitcoin's future are actively taking place. The emphasis is often on sources that provide objective analysis rather than speculative hype, ensuring users gain a balanced perspective. Fitz's own presence and the platform on which this information is shared, such as NBC Palm Springs, underscore the growing mainstream recognition and accessibility of cryptocurrency education. As more traditional media outlets engage with the crypto space, the availability of credible information sources increases, benefiting a wider audience. This initiative by Fitz is more than just a list. It's a contribution to building a more informed and resilient crypto community. By guiding individuals toward quality educational materials, Fitz helps foster a deeper appreciation for Bitcoin's potential and the technological innovations it represents. The impact of such recommendations can be significant, enabling individuals to better understand the risks and opportunities and to participate more confidently in the digital economy. The audience reaction to such curated lists is typically very positive, with many users expressing gratitude for the simplification of the learning curve. The value lies in filtering through the vast amount of information available online to present a concise, high-quality selection of learning materials. And that's a wrap on today's essential updates. Before you go, let's do a quick recap of everything we covered. All right, everyone, that's a wrap for today's Bitcoin Bulletin. We saw state funds getting smart with Bitcoin via MicroStrategy, a potential whale shift from Bitcoin to Ethereum amidst volatility, Bitcoin's unbreakable network dominance pulling in the altcoins, and essential learning resources shared by Fitz. Don't miss out on any future updates. Smash that like button, subscribe to the channel, ring that notification bell, and follow us on all our social platforms so you never miss a beat. We'll see you in the next one.